Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and today is Wednesday, August 20th, 2025. And here are the things you need to know to get your day started. Well, markets are toppy. The growth names, guess what, are under pressure. Utilities, consumer staples, healthcare, real estate all ended the day higher, though. The VIX spikes, bonds are up, oil churns, and gold ends lower. Now, the question is will Vlad and Voldy break bread anytime soon? And what do we have for dinner tonight? We're going to have the steak pizzaiola. It is easy and delicious. Okay, look, I have been saying, and I quote, I remain in the camp that we are toppy, which only means I'm more cautious on where I allocate. Doing nothing is a decision. You don't have to do something all the time. So, the question is, has that pullback that I've been warning about for weeks finally begun? Now, we're at the end of August. We're about to enter September, which is always an interesting time for the markets, right? Now, let's rewind. Over the summer, the Nasdaq kept powering to new highs while the broader indexes just kind of churned, right? A handful of names giving the illusion of a healthy market. New high after new high, but beneath the surface, the story wasn't so pretty. Even the S&P's incremental gains were driven by those same heavyweights. Remember, the S&P is a market cap weighted index, so the big boys really call the shots. Now, while the Nasdaq chart looked shiny, the S&P, the equal-weight S&P, and the Dow were all flashing caution signs, and now the caution is beginning to show up. Yesterday's tape tells you the story. While the Dow gained 10 points, the S&P lost 38, right, down 0.6. The Nasdaq lost 315, down 1.5%. Russell lost 13 points, down 0.8. The transports, though, did gain 226 points. They were up 1.5%. The equal-weighted S&P was up 34 points, or 0.5%, while the Mag 7 lost 502 points, down 1.7%. The damage squarely in the Nasdaq and the Mag 7. Now, you might say, down 1.7%, what's the big deal? Okay, but pull back the sheets, and it gets more interesting. Palantir was down 9.5% yesterday. It's down 17% off the summer highs. NVDA down 3.5% yesterday alone. Meta was down 2% yesterday. It's 5% off the high, and the July 31st gap at 707 appears to be waiting to be filled. That's down another 6% from here. Microsoft was down 1.5% yesterday. It's down 7.25% off the August 1st surge. AMD down 5.4% yesterday, 11% in 4 days. Google was down 3% in just 2 days. CoreWeave was down 4% yesterday. It's down 40% this month alone. And it's not just the individual names. Sector ETFs are kind of confirmed that. Obviously, the tech is down 3.1%. The semis are down 3%. Disruptive tech, ARKK ETF, is down 6%. IGM, which is expanded tech, down 3.25%. And that's just this week. So suddenly, traders and algos, I didn't say investors because investors view investing differently. Traders and algos are paring back their positions, worried that the rally's gone too far. Hello, right? Too far, too fast. Does this remind anyone of anything? Now, part of the pullback comes from the realization that those 100 basis points worth of cuts that were being priced in for 2025 is kind of a pipe dream. Mixed economic data, labor, housing, manufacturing, sentiment, inflation expectations, durable goods, all suggest a slowing economy, not failing, just slowing. So there's no reason to light your hair on fire. Then came the latest PPI report showing producer prices aren't just simmering, they may be starting to boil. Now look at the UK for a cautionary tale. Ever since the BOE's rate cutting bonanza, down 125 points in 12 months, inflation has flared up. July's UK inflation is at 3.8%. While the UK is struggling with services and food, they also face labor and policy pressures. It's exactly what JJ is worried about. Now, for those not around in 79.80, trust me, you prefer that JJ remain cautious because that back then the Fed cut too soon, declared victory on the inflation monster, but then it came roaring back. By 1980, inflation spiked to 13%. Fed funds were 21%. Mortgage rates were pushing 18%, and housing collapsed. And for the record, that's how I was able to buy a house in 1985. On the geopolitical front, there's finally some good news. Word is that Vlad and Voldy may sit down and break bread. Right, with Donnie refereeing. Whispers suggest that the war could be over by Labor Day. At home, it's a different story. Political uncertainty. Think New York City, Texas, D.C., California are all adding to the anxiety. And now all eyes are turning to Jackson Hole, the annual central bankers boondoggle where JJ is set to speak. Now, look, I don't expect him to hijack it with a surprise FOMC press conference. But the markets are bracing for even the faintest hint of the path of rates. Remember, this is JJ's last Jackson Hole meeting. His term ends next May. So will he hint at multiple rate cuts? Probably not. And all that nervous energy under the sheets? Well, we can call it performance anxiety, one that the little blue pill is not going to help. But don't despair. Opportunities still exist. While tech was down 1 3/4 and communications was down 6/10 yesterday, they got punched in the face. We saw strength in sectors that only confirms why you have a balanced portfolio, right? Utilities are up 1%, consumer staples up 1%, real estate up 1.8%, healthcare up 6/10, basic materials were up 6/10, Homebuilders were up 1.5%, big pharma up 0.8%. Right? So check this out as well. The PSQ, which is a Nasdaq short ETF, was up 1.4%. NAIL, which is the 3-time Homebuilders leverage ETF, was up 5%. The SH, which is the S&P short, up 0.6. The VIX was up 2%. The VIX itself was up 3.9%. So there's always plenty of places to play. If you want to play, you just have to look. Now, bonds rallied. The TLT was up 0.6, the DLH up 0.5%. The 10-year now is at 4.29%, down from 4.34%. The 30 years at 4.88, down from 4.9. Oil's at up 65 cents at $63 a barrel, but still below all three trend lines. A Russia-Ukraine deal is likely going to see oil go lower. Gold, well, that broke support at 33.78, traded down as low as 33.58. This morning it's bouncing a little bit at 33.69. If peace talks stick, gold could test 33.25. If we get more good news, we could see gold trade down to 3,200. The VIX was all over the place this morning. It was up 3.5% at 4 o'clock. It's now up 1.7% down. It's below all three resistance levels, but a breakout above that, you can expect more volatility to swift equity weakness. If not, markets are going to grind lower until we hear JJ speak. This morning, futures are down. Dow down 42, SP's down 5, Nasdaq's down 12, the Russell's down 4. Target plunges 7.5% after some ugly headlines about transactional growth and margins shrinking and same-store sales negative and a new CEO to boot. How's that working? Bottom line, investors are preparing for a slower economy with sticky prices. Indexes are near record highs, so traders and algos are taking money off the table, which makes some sense for them. They pulled the same stunt back in April as they tried to panic the markets. How'd that work out? If you're a long-term investor and you are diversified and balanced, you welcome these pullbacks and chances to put more money to work. European markets this morning are mixed to lower. The S&P closed yesterday at 64.11, down 38 points. The market again is frothy. Valuations are rich. Retailers are mixed. And now we wait for JJ. If he's too hawkish, markets will correct. If he's neutral, we'll get a healthy pullback. There's plenty of money on the sidelines ready to pounce when stocks go on sale. We're already starting to see that, right? Most likely more to come in the very sexy growth names, right? I just announced those above. Again, I remain in the camp that we're Toppy, which only means I'm being more cautious. Doing nothing is a decision. Let your portfolio do the work and brace yourself for a volatile September. If you want to talk strategy, let's review your plan. Call me for a complimentary, no obligation portfolio analysis at 561-931-0190. Okay, what do we have for dinner today? We're having the steak pizzaiola. This is easy to make. It's delicious. It's hearty. It's filling. And it's just so good. For these, you just need a couple of things. You need a nice ribeye or a T-bone, about 3/4 of an inch thick, olive oil, oregano, garlic, onions, red and green bell peppers, a can of crushed tomatoes, not puree. You need some red wine, salt and pepper, and crushed red pepper flakes if you really want to make it hot, but that's optional. Now, in the saucepan, heat up the olive oil and add the crushed and sliced garlic. Move it around a couple of minutes until it's all nice and golden, right? Add in the sliced onion and the julienne bell peppers. Turn the heat to medium and cover. Let those cook. When the onions and peppers are soft, 5 or 8 minutes, you're going to add in the crushed tomatoes, the oregano, and the red pepper flakes if you're using them. Season it with salt and pepper, turn up the heat, bring it to a boil, and then reduce heat just to medium. Now you're going to add in about a half a cup of red wine if you want, but you should. Again, taste it for salt and pepper, let it simmer and thicken up. Takes about 10 to 15 minutes. Next, rub the steaks with olive oil, salt, and pepper. Do not drown them, just enough to massage them, right? Getting ready for the grill. Sear the steaks on the grill and cook for about 4 minutes per side. Then take them off and add the steaks to the peppers and onions and tomatoes. Cover it, turn the heat to simmer, and let it cook for another 5 minutes or so. This should give you a nice medium steak, right? Depending on the thickness. If you prefer, you let it simmer for longer. If you want more, well done. When it's done, remove the steaks from the pan. Slice it into thick strips and arrange it on the plate. This should be enough to feed, 4 adults. Next, stir the sauce in the skillet pan to deglaze the bottom, making sure you scrape up all the bits. Now, spoon the sauce over the steak and serve it immediately. Present this with a large mixed salad of arugula, Boston Bib, and romaine, topped with tomatoes and red onions and cucumbers, right? You can dress it in a red wine vinaigrette if you like. For wine, I'd keep it simple. I'd do something like a Chianti, but if you want something more robust, you can certainly do like a Brunello di Montalcino, which is like velvet. Either way, you can't go wrong, right? You can thank me tomorrow. Until then, take good care.